right, good afternoon, folks. This is Faris with Trade with Tex. Today, we're going to have another edition of the YouTube Weekend Chart Prep video series where we just go over some opportunity for the upcoming week. Again, a reminder, this is not an educational video. We'll go over a couple of strategies here or there for different chart setups. But basically, our goal is just to help you guys make money so that we can capitalize on some of these setups together. Okay, what we're mainly going to discuss, as usual, we're going to start it off with the S&P. Then we're going to transition into a couple of earnings plays and large caps. And at the end, we'll wrap it up with some of the momentum plays and lower price stocks for the upcoming week. So it's a little bit of everything, and that's kind of what we got the past 5 days, right? We had futures, options, and then a lot of these hot electric vehicle stocks running up all throughout the week. Okay. Now, first things first, for the S&P, I know everybody and their mother last week had a big bearish target, and bottom line, right, we were looking for a gap fill. We were looking for a pop up, and we got it, right? We got it not quite up to our second and third target, which is pretty interesting, right? Just looking back, typically going into a new week, we have 1, 2, 3 price targets. Last week, we only got up to the first one. So we're going to go to the futures chart here in just a second in Thinkorswim, but I wanted to show you the SPY first because it shows the gap and it shows a better idea of what happened on the weekly without all the craziness that I have on the futures chart. So this is the daily time frame first off. Now we're still looking for this gap fill. We're looking for a push up to this area before that drop off down to the 200-day. That was the second target for this past week. We did not quite get there, unfortunately. So we're still looking to hit that because the trend is still intact. And I think realistically, we can knock that out this week. Okay. Our second target, to give you an idea, is up here. Okay. I'm not giving you exact levels because I will provide them on the futures chart in just a minute. Okay. Now, daily chart, just for trend analysis, so you guys get a good idea, because again, social media and overall sentiment is like hell is freezing over. It's doomsday, right? Is what everybody's saying, but price still says otherwise. So the daily chart, just in terms of trend, we have the 8 crossing above the 20 EMA here, which indicates a little bit of a trend shift to the upside, believe it or not. On top of that, we have a very obvious defense at that 8 EMA. And again, the 8 EMA usually precedes a bigger move to the upside. So even though you could argue that the NASDAQ was really overextended this week and a lot of these names really need to pull back, if we do pull back, this is the area to watch. That's kind of worst case scenario, in my opinion. If this trend stays intact, which is what is being signaled here because we put in the higher swing low off of the trend support, right, clean off the moving average, then we should be able to knock out targets 1 and 2 this week. So in terms of risk, I'm looking at the 8 EMA. And then in terms of reward, I'm looking at, for the S&P, right, SPY, 319. But I'll shift over to the futures in just a sec here and show you what that key level is. Okay, so risk down to the 8 EMA. And I wanted to show you the weekly before I do that. Weekly also giving us a good idea of the price action here in the sense that we dipped down, that was clearly defended, and now we are ramping back up. And what this past week's candle shows is some dip buying pressure as well, because we have a bigger lower shadow there. Okay, so dip was bought up, even if it was on lower volume. We should be visiting that resistance this week. Okay, now for futures, just to show you how crazy this chart looks. Got all my key levels, but I'm not deleting them because I'm stubborn. Basically, this was the support for this week, specifically the level that supported us a lot, so that you guys get an idea of the 2 support levels I'm looking at. We have this fib in the moving average, but the one that we defended twice on higher volume, right? Because whenever you're looking at a chart, you're looking at 2 things, price and volume. So where volume and price are concentrated this past week was Thursday on that dip. Thursday and then transitioning into Friday. So even though the 8 EMA is support below, we have one more fib on the hourly chart. Okay, we're getting a little bit advanced here for those of you who are new to this, but we have one more fib on the hourly chart that's down at 3113.75, which I'm going to play that card again. Nobody no chart that I saw on social media had this as a key level. And this is really just the magic of fibs working again. But this worked perfectly for a bounce twice this week and much larger moves. So moving forward, even though we're kind of leaving that in the dust, that's a level I'll be keeping on my chart. Okay. Now, for resistance, it's a little bit easier. Our first target for this week was 31.84. And I really, if I'm being honest, did not expect to turn that hard off of it. We got smacked down at that level. So this week, I'm hoping we at least get an early test of that to get an idea of whether or not we can break it. Regardless, even if we can't break it, I'm still looking for a move up to 3212.75. That's going to be the big target. Okay, so I'm going to be a little bit more modest this week. Last week's first target was 31.84. We're going to keep that for the first target this week, and then this will be target 2. Okay, I know after I post this, everybody's going to say, well, Faris, what about 3,200? Don't care, right? 3212.75 is the next target. Okay, and just 2 bigger support levels to look at moving forward, those 2. All right, that's trend support, and this is historical now. All right, so S&P, those are the 2 targets. We put in a higher swing low last week. Let's see if that maintains, and we can keep running up into the start of earnings season. And I don't know about you guys, I am very optimistic about this earnings season, not in terms of being bullish, right? Just in terms of making money on it and capitalizing. I think that a lot of these movers, specifically banks that report this week, are going to give us some good range. And that's what we capitalize on, range. Okay, just whether it's up or down, as long as the stock is moving, I don't care. Okay, we're able to capitalize on it. So first thing I'm going to say, banks report this week. Also, Netflix reports later in the week, but Netflix went a little bit crazy last week, as you guys can see. Either way, the 2 banks that I'm going to be looking at, and we're just going to go over one today. Goldman Sachs, as you guys know, one of my go-to favorites because it just plays out so well based off the technicals. This thing bounces off of every single key level and goes straight to the target. So I'm going to be watching GS because that's one of my favorites. That's what I'm comfortable with. And you guys, if you haven't been given this advice in the past, stay in your comfort zone. You can practice out of your comfort zone. So if you're back testing a new strategy or a new scanner or whatever, you can go out of your comfort zone with that. But for real money, for your real trades, stay in it. So I'm comfortable with this bank. The other one that I like is Citi, but I haven't traded that one as much in the past. Okay, so Goldman Sachs is perking up a little bit before earnings this week. Basically for banks, we pulled back hard within the past month. It had a huge run up, pulled back hard, and now we're starting to curl back up. So to give you an idea, this is what every chart looks like for the financial sector. I'm looking for just a pop up to here and here. Okay, realistically, I do think that we can go for the full move up to the previous high for a lot of these banks, right? Not 52-week high, but if you zoom it out, right, you guys get a good idea. This is where we crashed down to, trended up, and I'm looking for a push up to that swing high and that swing high. Okay, I think that's very realistic. So for Goldman Sachs, what that means is we would pop up to 215. That's going to be the big target for this week. And then the next one would not be the daily fib. It would actually be the historical level before that, which is at 222.24. That's enough 2s for a lifetime right there, but 222.24. Okay, so what that looks like is this. Target 1, target 2. And you might be saying, well, Faris, why do we even think that it's going to go up there? We can't just assume that earnings are going to be positive, and you're right. Okay, so what we need now is confirmation, right? What do we want to happen in order to capitalize on this and actually strike while the iron's hot? Okay, and that's basically what we're doing for each of these tickers, right? For the S&P, we want the break of 31.84. For Goldman, we want the break of 207.51. All right, you have to use multiple time frames here. Mainly what I use in my weekend prep are the daily and weekly time frames. So that's the 3 year, 1 week, and then the 1 year, 1 day. Okay, those are the 2 main ones that I use. The weekly gives you a good idea of where the bigger levels are, and if you swap this over to the weekly, Again, all we're doing is looking where volume and price are concentrated. At a glance, you can see here, right? And then if we look at where that volume is, we can follow it up. Make that a little bit bigger. Right there. That big dump back down to support. So what this is telling us is that that high is going to be resistance. And as you can see, we tested that this week. We could not hold. So it has not confirmed, meaning we need a base above that level for those two targets to hit. Okay, those two targets are here and here. So I like this chart because it's easy to read, right? In the sense that we got our 3 key levels mapped out. We just need confirmation, right? I'm not looking at the daily fib that much, even though that's a huge fib. I'm not looking at that moving average that much, even though it's a big moving average, because if we focus on where price and volume are concentrated, that's right here. Okay, and if we break that, it's just air. There's nothing here until 215. Okay, so that's the meat of the move that we're looking to get. So options traders should be watering at the mouth here. Great setup, just needs to confirm. Okay, so Goldman over 207.51. All right, for Citi, it's a similar chart. I'll just flash this on the screen share real quick. Citi, it's a similar chart. It's just a break of this box, sends us up to this level. Remember, I told you guys they're all ramping up like that. So we're looking for a pushback up there and there. Okay. Now, there are 2 other large caps that I wanted to mention, and then I'll show you guys some of the lower priced plays. 2 that I really did not look at all that much this past week. Actually, the first one I barely looked at this past week. First one is Chipotle, which I do hold long terms. I bought the dip again down here. I actually did not get the best average, if I'm being honest. Got it in the 700s and then the 600s. But now the stock is up, so hindsight is always 20/20. It's doing great. But full disclosure, I do have a long-term position, just to be transparent here. Either way, for CMG, I'm looking for an options trade on this one as well. Again, you can see that I trade futures, options, small caps, whatever makes me money. But for this one, if you look at the weekly chart, again, larger time frames equal larger moves. It is extending its range, right? So it ran up, consolidated, and I'm calling this consolidation. That's a fancy way of saying that price stood still while volume dropped down. That shows that bulls are still in control because bears are unable to sell this back down. So it consolidated, and then this past week, it closed above the resistance, which was at 1087. Okay, and I will say it's really easy to get comfortable in this market, especially when there are a lot of stocks like Tesla and some of these other EV plays that really don't belong at the prices they're trading at. But because there's all this euphoric buying pressure, the stocks are flying through your targets. So you start to get in the mindset of, oh, I'm being too disciplined. You cannot be too disciplined. And with CMG, there's one thing I've learned in the past with this ticker. You 1000% have to be disciplined if you're going to trade it. Okay? Meaning, if the stock drops back down below 1087, right off the bat, I'm going to say this, leave it alone. Okay? It will just chop around and go sideways and bleed you dry. Okay? So, bottom line, 1087 broke. Now, if we switch it back to the daily, you get a good idea of where it would gain momentum and where you can step in for a dip buy. Okay, for a dip buy, I'm mainly looking at these 2 areas, the 8 EMA, which you guys can tell I use a lot, all right, and this trend line. You just drop from the low and then connect it through. Okay, both of these line up, so I'm thinking of this as a zone, which really, guys, if you draw trend lines consistently and you notice that the way you're drawing them does not work well, this is why. You have to think of this as trend support, but as a zone. Right, so between the moving average and the trend line, that's where people are willing to buy. Right, I'm telling you right now, that's where I'm willing to buy. So by that logic, if we dip down there, you have sufficient risk to reward to take it long. Okay, if it drops below 1087, it is no longer appealing, even though it's cheaper, so we would leave it alone. But breaking out, and we have 1 key level overhead and then 2 targets in the distance. So this is where I would like to buy. And then based off the key level overhead, 1129.38 is the resistance, again, where price and volume are concentrated. It's the high of this candle. And then our next target, which is where we would really bank on some of these call options, 1164.55. And again, it's not an educational video. I'm not going to show you guys how to get that level. I want to save time here, keep it as short and sweet as possible, because these videos already run kind of long, usually like 20-30 minutes. So I'm just going to leave it at that. Okay, this is the breakout that it needs to stay above. This will be target 1, and that's going to be big resistance. All right, I'll be honest with you, that's going to be big resistance. And then if that clears, we got plenty of room. And this is where your options turn from a 100% gainer to a 300 to 500% gainer minimum. Okay, so CMG, ideal entry would be off of support. Regardless, we're looking for a push up to this level and a breakout to give us 1164.5. Okay, and those of you that want to get real technical, this is an ascending triangle breakout. Okay, ascending triangle, because we have resistance and then trend support. All right. Now, last large cap that I'll mention here, because this is already becoming a pretty long list, CCL. And I'll be honest with you guys, you've probably heard me say it in past videos. I do not like cruise lines. I love cruises. I've actually been on a Carnival cruise, but I'm not a fan of cruise lines because I don't really think that there's a lot of value in them. And I would like for them to make me eat my words and for them to fly up off these lows, but even airlines, I'm not all that comfortable with. Bottom line, a couple of the cruise lines this week reported earnings, some of them even saying that they are setting sail earlier than expected. So this is bringing in some dip buyers, if you can't already tell from the volume. One of the members in our chat, DCR, he's DCR Charts on Twitter. He posts some good ones. You can see his analysis on CCL there too, but he brought this to my attention. And he mentioned that it was a really good risk to reward play off the lows because it kept defending this support zone. So this week it defended it again, okay? And realistic upside is actually looking pretty good short term. So it's got a catalyst, right? A couple of these cruise lines set in sail earlier. And it had a positive reaction to earnings. So right now all I'm looking for is a base above this area here. All right, it's 1615 to the 50 SMA, which is at 1633. It's a zone. If we can hold above that short term, it'll immediately jump up to 17. I believe that's 25. Is that what it says? Hold on. Yeah, 1725. Okay, which is this fib resistance. All right. Again, fibs have been magic these past couple weeks. They're always magic, right? They work perfectly. So just looking for a pop up to that area. And this is one of those plays just like CMG, where if it clears the resistance, it's got a lot of potential. So when you're prioritizing your watch list, you look at probability, right? The chance that this trade hits, and then potential, what has the most room to run. Since it's a bottom bouncer, it's a little bit less likely for it to just magnet up to the resistance, but if we're able to clear this zone, it should go right to it, and then it has blue skies if it breaks that. Our job isn't to predict whether or not it's going to break. We're going to have to read the price action. I'm talking about break 1725, that first target, but I really like that upside. Okay, so that would be the big target for this week. All right, so simple game plan, breaks that resistance, we go straight up to the next area. Okay, a lot of volume, a lot of bullish options flow. Watching this one closely. All right, and you could trade common stock on it, right? It's a $16 stock. You don't need to play options if you don't have the ability to. Okay, so that pretty much wraps it up for large caps, and I'll get into some of the smaller momentum plays briefly. Again, Goldman, we're looking for that simple resistance break for a move up to 215. All right, CMG, hopefully we can get the breakout this week. It reports on the 22nd. So we got about, what is that, like 7-8 trading days? All right, 10 full days, but 7 or 8 trading days until the report. I'm thinking we'll get a nice pop-up ahead of it because the last report was very impressive. Okay, so we're looking for a breakout on this one. And then CCL is a bottom bouncer. A little bit riskier, but above 1615. As one of our buddies in chat, Dennis P, says, it could get jiggy. Okay, it has some big-time potential to get jiggy there. All right. Now, last couple of plays I'll mention, for those of you that watch small caps, I'm going to be steering clear of the electric vehicle plays this week. I think Tesla's really getting up into no man's land. I think that some of the other plays like Workhorse, NIO really don't belong at the valuations they're trading at. And I'm mainly a technical guy. I do sprinkle in fundamentals here or there. So I think that the run is just getting way too overbought. So based off of my comfort zone, I'm going to steer to just individual plays, right? I'm going to shift gears a little bit. The three that I want to mention here, RVP, CPSH, and UAVS. Now, first off, I'm fully aware that RVP did not confirm the breakout last week. I just want to say that. RVP and CPSH are both Bowser Report stocks, right? BOWSER, Bowser Report. That's the long-term investment newsletter for penny stock investors that I produce content for. You know, we recommended these stocks a long time ago, but the companies are still killing it. So I'm not saying, you know, pay a higher premium than what we initially paid. I'm saying these are stocks that are on a tear and they're not slowing down. And the Bowser Report only recommends good companies. So they're actually decent companies behind the tickers. They're not trash can EV stocks that are just moving on hype. Okay. So RVP landed a big contract this past week. That's why it got that huge spike. Unfortunately, it got rejected at 925. So no matter what, the next time you play it, don't have a price target of $10. That seemed to be the common thing that I saw online. Just in the chat too, a couple of people threw out that target this week, and I don't think that's realistic. I think that since that's the 61.8% fib on a bigger picture chart, that's a big key level moving forward. That's going to be the final target no matter what. Either way, I want it back above 795, and I'm even willing to buy it on weakness if it comes down to 685, which is the 20 EMA. Sorry, 20 SMA. We're not using Keltner channels here, so 20 SMA. Okay, so this is the big resistance that we did not confirm the move above. That's right here. Actually, let me zoom it in. Too far away here. All right, that's right there. And then the support from the moving averages down there at 685. So it landed a big contract. Bottom line, the contract is massive in relation to its market cap. Obviously, the stock responded well, but did not confirm. And that's why we're looking to re-enter. I would love to re-enter on weakness. This is the better scenario. But if it starts running up in advance and does not give us that price, 795 would be the key break. Okay. And this is an alert that I should already have set. So I'm going to set it right now. Right click my chart and then just set alert at or above 795. And I'm going to write myself a nice positive note there to put the cherry on top. Okay. So that would be the breakout price that I'm looking at. And then for a good risk to reward swing trade, would like it off 685. All right. And then the last two tickers here. By the way, the RVP contract was, I think, 53 million, 56 million, something like that. A lot of money for a small company. CPSH is just a COVID play. Basically, if it stays above 3, it has room to 4. Notice I don't have a lot of chart drawings on here. It's because I deleted them all to keep it simple. It has not been able to hold above 3 for quite some time. And even though the stock is a little bit overextended, it is clearly breaking out. It is clearly holding. So gonna keep it nice and simple. Over 3, we go to 4. All right, if you want to factor in all the old long-term levels and overcomplicate it, be my guest. I think this is best kept simple. All right. And then the last ticker is just UAVS. I ran a lot of penny scans over the weekend, and 90% of the stocks that I looked at looked either really overbought or really oversold. There was no in-between of healthy charts other than RVP and CPSH. And even those are kind of, me being a little bit overly optimistic, right? I think that they have the potential, but we need to wait for that confirmation first. So UAVS, one of the few that has a healthier chart. Volume pattern's really good for a potential spike, right? We spiked up, and now volume is heating up. And this is where relative volume really comes into play. Naturally, you look at this chart and think, oh, that's pretty high volume, but 42 mil versus the 9 mil average volume, that's a huge increase, okay, from 9 to 42. So big increase in volume. I'm sure you guys saw it in your penny scans this weekend. And bottom line, it's holding above multiple historical resistance levels here. So as long as UAVS holds this move and does not just fall back right into the 170s, we should be able to hit 208 and then 267. All right, those are the targets. I'm not crazy about the company like I am for CPSH and RVP, so take this one with a grain of salt, but if it maintains momentum, it should be able to complete a day 2 and day 3 run up. All right, and that's pretty much it. Okay, so a couple of large caps to watch for you options traders and just common stock traders, and then a couple of pennies that aren't hot, right? These are stocks that are not as popular, that have more potential because they're earlier in their run-ups. Okay, last thing I'll say, guys, I'll probably be putting out another YouTube video this week, not with regards to chart prep and opportunity, but an educational one to show you guys a strategy that we've been using in the chat room a lot more. Okay, and that's the Trade with Text chat room. I say this at the end of every video, but if you want to try out the free week because you can't afford the $50 a month membership to get the live alerts and screen share and audio, join us for a free week, right? I know a few of you came from YouTube last week. A few is an understatement, but you got to make some money in the chat. You banked with us. We had a huge week last week. Before that, it was a little bit quieter, but last week was great. And I'm sure that free week trial was worth it. So if you banked, congrats, and you want to sign up for the $50 a month, by all means, go for it. If not, and you're new, join us, right? Try the free week and see if you can make some money with us and learn something new. Okay, but either way, thanks for prepping up some of these charts with me. Hopefully we get some of these targets hit early in the week, and green screens to you. All right, good luck at the start of earnings season here. Take it easy, folks.